Hi, this is Tiski. I'll talk in this video about the allowance method. There are two ways to deal with the allowance method. We have the aging method, and we have percentage of sales method. We'll see first the aging method, then we will talk about the sales method. Okay, so let's start. First, the aging method, we need to do 4 steps. First, we have to make the aging table. What is the aging table? Is like this table. It will have the classification, that means the age of the receivable. We will have current, then list between 31 to 60 days, 61 to 90 days, 91 days to 180 days, and over 180 days. So this in terms of days, so the age of that receivable in term of age. And we'll put the amount or the total amount of all the receivables that, for example, less than 31 days is 680,000, and for 31 to 60 days old is $60,000, and so on. For over 180, for example, we have 30,000, and we have the total here. Then we will get the percentage that we think that these receivables won't be collected. So we assume here that 0.5% of these receivables won't be collected, and 6% for the 31 to 60 days old, and 25%, and so on. So notice that 95% of the receivables that are more than 180 days old will be uncollected. So as the days increase, the percentage or the chance that these receivables won't be collected increase as well. And after that, we just multiply by the percentage. So when you multiply 60,000 by 6%, will give you the $3,600, and so on for the rest. Then you will get the total. So in total, we say that $68,000 we think that it won't be collected. So 68,000 won't be collected. We'll keep in mind that 68,000 won't be collected. So what we need to do is we will go and see the balance for allowance before the adjustment. So it's telling us that the allowance account balance before adjustment is $36,000, and the desired balance that we want is 68,000, because we have calculated that 68,000 need to be written off. So we have to bring the allowance balance to 68,000 instead of 36,000. So we have to book for another $32,000. Let's see how that may be done. So the adjusting entry would be debiting the allowance for doubtful accounts by 32,000, and you will credit you will credit bad debt expense account by the $32,000. So you will increase or decrease the allowance account balance to the balance that you want. So the allowance balance started with 36. If you put the T account here for the allowance account, so we started with 36,000, and we need the ending balance to be $68,000. So what we need to add here is the 32,000, the difference. So 36 plus 32, it will be 68,000, the desired balance that we want. Okay, let's assume that after writing off all of these amounts, one company that we have assumed that they won't pay for, let's say, the $400, they came and pay it actually. So how we can recover the amount from the allowance account? What we will do, we have two journal entries. First, we will debit account receivable by the $400, and you will credit the allowance account by the 400. So we'll decrease allowance, here we have a credit, and we will increase account receivable. Then, so this is the first journal entry. Then, because they have paid it, so we will increase cash by 400, and we will credit account receivable by 400. You may ask why we don't just debit cash and credit allowance. The problem is that when you come to cash flow statement, you will need to do it this way to not confuse yourself. So it's recommended to do it that way so you can calculate the cash flow easily in your financial statements. Okay, let's see the percentage of sales method. So let's say that you have credit sales for this year is $90,000. So 90,000 is your credit sale for this year or for this period, whatever. And you have, let's say, a stable relationship between the total sales and credit and the total uncollectible. And let's say this historical rate is 2%. So historically, 2% of the credit sales are uncollectible. So what we will do is that we would just multiply this percentage by the total credit sales, and we would say debit bad debts expense account by the number that will be 1800, and you will credit allowance account, the same number. So it's the same journal entry, but how we arrive to this number is the difference between the allowance method and the percentage of sales method. So in percentage of sales, we assume that there is stable relationship between the number of uncollectable and the total credit sales for the year. Okay, thank you for watching this video. I hope that it makes the understanding for the writing off of account receivable easier for you. If you have any question, contact us in IST Academy and we will be happy to help you. Bye bye.